Hello, financial fans. Had another wild week on Wall Street. And for me, I made one trade. I sold LVS, Las Vegas Sands, the stock that I'd held on to for probably a couple of years, small profit, and locked in the profit. And it looks like the first quarter of 2021 is going to be a pretty good one, but of course it's hard to predict more than 10 minutes ahead of time in this particular market of 2021. But if the COVID restrictions are lifting, the summer appears to be something that could be very profitable, but too difficult to tell stock by stock. But I have found a few stocks that I think would be worth considering for your portfolio or mine. And one of them tells us to buy low, but we will begin by looking at Coca-Cola. KO is the symbol for Coca-Cola. Closed Friday, $50.36. And by the way, this is March the 13th, and so Friday was the 12th, I guess. $50.36. The price for one share of Coca-Cola. Closing time on Friday, looking about 2/3 of the way down. The first column on the left, 52-week range for Coca-Cola, $36.27 to $54.93. And the average volume, about 18 million shares trade every day, so it's a very active stock. And according to the Yahoo page, they consider this stock to be near fair value. The middle column, third item down, the PE ratio, pretty high, 28.13, but Coca-Cola might have a very good summer coming up. It might grow into these numbers. And the forward dividend and yield, 3.34, so 3.33% is the dividend from Coca-Cola, and that's a nice dividend while you're holding on to the stock. And the one-year target for Coca-Cola, $57.59. That would be a nice move upward. So Coke might be looking like it's giving out buying signals. Next stock we look at, buy low. Buy low, L-O-W. That's the symbol for Lowe's, L-O-W-E. Apostrophe S, and it closed Friday at $171.55 per share. And looking down the 52-week range, we see it moved all the way from $60 a share to $180 a share, so triple the low to get to the high, and currently very near the high, 171.55. And again, this is considered to be near fair value from the numbers. The average volume, a little over 4 million shares trade every day. The PE ratio, 22, still higher than I would like for it to be, but Lowe's is one of those companies that is not hurt a lot by the competition from Amazon, because Lowe's handles a specific type of item, things that would be used in construction, big items that you might need a truck to haul around. And the dividend, a low 1.4%, and the target, one-year target for Lowe's, 196.38. So that would be a nice move upward if that happens. And the next two stocks each have pretty good dividends. Energy Transfer, ET, is the symbol, and it's $8.48 per share as of Friday's closing. The average volume, 23 million shares, and it's considered to be overvalued at Yahoo. And the PE ratio not applicable because it's losing money per share, and it has a forward dividend and yield of 7.3%. Now it can't really afford to keep paying that out unless it gets some earnings, but maybe they know something we don't know. The one-year target, $10.78, and again that would be a nice move upward. Certainly worth looking at. The Energy Transfer ET, the symbol. And the last stock we'll look at today, Pembina Pipeline Corporation, PBA is the symbol, $30.68 per share. And the 52-week range, $10.58 to $30.95, so it's right up there at its high for the past 52 weeks. The volume, about 1.5 million shares trade every day, and it's considered to be overvalued. The PE ratio, 16.74, and the forward dividend, 6.72%. That's a very good return on your income while you're holding on to the stock. And the 1-year target estimate, $41.93. And I thank you very much for watching.